I've spent thousands of dollars on trading psychology courses, and until now they have been nothing but average. This is something that took me 4 years to figure out, and after finding this out, I was able to make hundreds of thousands of dollars just from the markets. It also took me multiple months to be able to actually put this into words and be able to simplify it in a way that I can give it to you so simply. And I knew I needed something like this because just like you, I was blowing accounts. After 2 years of trading, I was still blowing prop firm accounts, still blowing prop firm challenges, not getting a payout, not understanding what was the problem. I would get funded and I would never get a payout. And sometimes I wouldn't even get funded. And I always thought that trading psychology was the problem. And that's why in 1 year, I spent thousands of dollars in trading psychology courses. And afterwards, after a couple of months, nothing mattered anymore. And I first started understanding this concept when I started winning consistently. I would start winning, and then as soon as I went into a little bit of a losing streak, I would think, oh my God, what is my trading psychology doing right now? How can I fix this? Not understanding that a lot of the problems that arose were from the trading technicals and just mere probabilities. But every time that I was taking losses, I was instantly blaming trading psychology, not understanding what do I need to do now? And there was also multiple times I had multiple instances of almost passing a prop firm challenge or almost getting to a payout to just end up blowing it in 1 week. We're talking challenges, we're talking possible payouts that were absolutely blown because of this one problem. And now you might ask yourself, well, but Kimmel, what is it? This is the thing. Trading psychology can be boiled down into one simple concept, and that is that your emotions are a reflection of the difference in your expectation and the reality. What this means is that whatever you expect from the market, if you do not receive that, all of a sudden you feel like something was taken away from you. For example, let's say you are 2% away from passing a prop firm challenge. How many of you already think, oh my God, this challenge is passed, it's done? And then you enter in one losing trade. And now you're a little bit further away. But supposedly you were already supposed to pass the challenge. So all of a sudden the market didn't only take away 1% or 2%, whatever you are risking on the challenge, it also took the idea that you were going to pass this prop firm challenge. And that is where the emotions arise. That's why you went on a tilt. And that's why I blew multiple challenges even though I was close to passing them. It's because I would enter in one losing trade and then another losing trade, and then the cycle began. So this is what you should know. This is the formula for your trading emotions. Emotions equals reality minus expectation. And I can tell you something that happened live in front of all of you here on YouTube. I was live streaming on YouTube and I was running a trade that was up $20,000 on one particular trade. And I knew that if the trade would have gone to take profit, that would have been a $30,000 trade. At that time, one of my biggest trades. I had already taken partials, I had already taken $10,000 worth of profit from that trade, and I was letting the rest run to make an extra $20,000. But what ended up happening was that the market completely reversed, and it ended up hitting all of my stop losses until then actually reversing and going to my final take profit. But the fact that I was trailed down and I only had a total of $10,000 worth of profit, even though I thought that the trade was going to give me $30,000 worth of profit, my mind didn't think, oh yeah, this was a $10,000 win. My mind actually thought this was a $20,000 loss. Why? Because emotions equals reality, which in this case was $10,000, minus expectation, which was $30,000. That means that emotions equals minus $20,000. So not only did I not appreciate the win, but I was actually tilted because the market has taken something away from me. And that is the problem with so many traders, is that you come into the market with an expectation that you are going to pass the challenge, that you are going to profit on your live account, that you are going to do so many things. But then when the market hits you with one losing trade or even a losing streak, you start believing that it's taking something bigger away from you. It's taking the profitability away from you. 1 month is not profitable. That means I'm not profitable. That's why I need to tilt and I need to make this money back. But in reality, if you accept that a profitable trader can have losing months, even losing quarters, you understand that one losing streak, 2 losing streaks do not matter. And that's why I came up with a formula, because once I understood all of this, and this came from a lot of experience, once I understood this, I understood that the foundation is this formula. And that's why there needs to be a fix to the formula that is going to reduce emotions almost to zero. So how could I have zero emotions? In the previous trade that I said I was going to profit $30,000, but in reality I only profited 10. What I could have done is, if I already expected the market to give me $10,000 worth of profit, which means expectation was 10,000 and reality was 10,000, notice what happens. 10,000 minus 10,000, that's zero. So the emotions, because my expectations equals reality, would have been basically zero. And obviously you need to understand, we're humans, we're still going to feel some sort of emotion. It's never going to be good to give profit back to the market, but if your expectations are aligned with what the market can actually give you, you will notice that your trading emotions are going to reduce drastically, right? And that's when I thought, okay, how can I solve this equation to make my emotions be more consistent? I'm going to give you the framework for losing streaks, for trading profitability, and even goals. I will tell you from the bigger picture to the tiniest picture, which is one specific trade. Because expectation and reality is in every single one of these. Trading profitability, yes, it's trading profitability, but this next trade matters. It doesn't really, but it matters in your mind to your trading profitability. So this is the one thing that you have to keep in mind. We'll start from small to large. Every time you enter in a trade, there are reasons as to why this trade is going to be a winner. That's why you took this trade, correct? Correct. But there's also reasons as to why this trade could be a loser. So for example, today, the students inside of the Simple Trading Edge entered on a long on euro dollar. But even though euro dollar is pointing to the upside, one of the things that all of the students kept in mind was that there was the possibility that the daily bearish order block that we were sitting in still takes charge and actually moves the price bearish. So there are reasons why the market is going to move higher. Those reasons outweigh the reasons as to why the market is going to move lower, right? But there's also reasons as to why the market could move lower. And you need to know those exact reasons. If you know those reasons, if the market does give you a losing trade, you will already understand, okay, this was exactly why. So we were at the bearish order block, maybe the weekly is still bearish, okay, so that's why this was a losing trade. But not only that, let's add one more tiny detail. You will actually expect that to happen. I want you to do this. When you enter in a trade, you know the reasons as to why it is going to work out, but now I want you to focus on the reasons as to why it is not going to work out. Why? I want you to expect every single trade that you enter on to be a loser. And if you do this, if the trade does end up being a loser in reality, and the way you expect the trade to be a loser is by always pointing out all the things against your trade. And believe me, there's no law of attraction in the market. There's no, hey, you attract more losers, blah, blah, blah. No, you focus on high quality setups, but you also list out all of the reasons why it's not going to play out. Next, and this is important, always expect the worst case scenario, which means if the market now moves to the upside and you are in a long and now you are able to reduce your stop loss to minus 0.5, for example, I want you to now, instead of expecting to take profit, you expect the loss, right? Then if you move to break even, what are you going to expect? You're going to expect the break even. And once the market hits take profit, there you go, you expected something worse than what happened. That means that as long as the positive emotion is not too crazy where you go reckless, then you did the right thing. So you always expect the worst case scenario until you reach take profit, right? So if you manage your trade, you expect your stop loss to get hit all of the time. And believe me, let me say this again, there is no law of attraction in the market. And yes, you're talking with someone that believes in the law of attraction everywhere else. If I believe that I'm the best trader, I'm going to act like the best trader. If I believe that I'm a really bad trader, I'm going to look for reasons as to why I'm a bad trader, and then it's going to mess my head. But in the markets, it does not matter. The market does not care about your feelings, does not care about your affirmations, right? Now, let's think about it in losing streaks. In losing streaks, you always expect worst case scenario on the first trade. Okay, it was a loss. It is what it is. It was a loss. It is what it is. It was a loss. It is what it is. When you look at the losing streak, I want you to think, this this is how really good traders are going to become even better. It's going through the losing streaks. Anyone can have a winning streak, but few traders can handle a losing streak. So if you put that into your mind, that your expectation is, I have to go through this because that's the only way that I will become a profitable trader, you'll understand that the bigger picture will be easier to understand. Now, when it comes into your trading goals, this is where your expectations should not be set on the outcome of a specific challenge, of a specific profit on a specific month, because it does not matter for your overall goal. Your goal when it comes to trading is, I have outcome-based goals. Believe me, this year I want to profit X amount in funding. But what is important for you to understand is that if I do not hit those goals, as long as I behaved as a profitable trader, the reality does not really matter, because I will be closer to those goals. And that's how you have to think about it in the bigger picture. And if you don't expect those goals to be hit, but you move as if those goals are going to be hit, so your expectations are basically neutral. While you have a big goal, if you do not hit the goal, you will be able to think, okay, I did great, I'm way closer to achieving that goal. Yes, I did not achieve it this year. That's fine. I'll do it next quarter. I'll do it next month. Doesn't really matter. What you need to understand is that trading psychology does not matter. And again, a lot of people will hate me for this, but if you stuck until the end, let me tell you, trading psychology, it does matter. But the reason I'm doing this video is because people put too much emphasis on trading psychology. They think it's the only thing that matters, when in reality, trading psychology, when you are not profitable yet, when you do not have yet a statistically profitable edge, is 10% and your technical edge is 90%. And then once you are profitable and once you scale up, that's when things flip around. Okay, now you are putting more size. Now you're seeing more profits. That's when trading psychology will be a big important factor, right? Keep that in mind. But even then, you do not need to spend thousands of dollars in trading psychology courses, because it's all about expectation and reality. If you are feeling emotions, ask yourself, what was the expectation on this trade? What was the expectation on this month? What was the reality? How can I reduce my expectations while doing my best work? And if you do that, you will see that trading psychology will completely change your trading. And now it's getting even more simple, because if you enter in a winning trade, if you enter in a losing trade and you notice that you are starting to tilt, the only thing you have to do is click 2 buttons on Trade Blocker and all of your trading websites and trading apps are going to be blocked. Thus, you can't really enter in any more trades. 2 clicks and no more over trading. So if you guys want to sign up to Trade Blocker, I've been developing this for months. Sign up with the link in the description for the waitlist. Personally, I'm making sure that I'm maxing out Funded Next. Hope you enjoyed. Let me know what you think about this in the comment section below. If I really like your comment and you comment with this emoji right here so I know you came until the end, I will personally give you a 10K Funded Next account. So make sure to comment with that emoji. Your biggest takeaway right here, make sure, reduce your expectations and your emotions will drastically reduce. Hope you enjoyed. We'll see you in the next one. Peace.